All right, welcome. Thank you all again for being here. Some of you are new to the Zoom calls. Welcome. We're pretty free flowing. And these are great because what it means for you to show up to us is that you're showing an interest in your business and the growth of it and getting better and learning something new. And I will tell you that our guest speaker today has got a wealth of knowledge. I'll introduce him in just a second, but this is an education for our staff too. And so before we get started, I want to make sure I introduce the staff that are on here. And if you have it in gallery view and all of the videos are on, you can just wave when I say your name. I'm Casey Fisher. I am out of Colorado. We have Mike Harris, who is normally out of Tampa, Florida, but he is in Indiana right now. We have BJ Leggett out of Texas. We have Mike McCabe, who is now out of the great state of Colorado as well. And Mr. John Mayer, who's the director of the program, our boss. He makes all the decisions. If you don't like anything that we do, you call him, not me. And he's on, I don't think his video's on, but he's in Texas as well. So let's get into this. Our guest speaker today gets paid a lot per hour, as most CPAs do, and people who reach the level in which he has an experience and expertise. Paid for his education, went through the whole process, and has earned the right to charge the amount that he charges. And he has graciously donated his time today. And we are going to learn some kind of basic points and maybe even dive a little bit deeper if you have very specific questions about your business, things about accounting, CPA, bookkeeping, all of the above. So Percy Lujan is a licensed CPA. He's one of the managing partners of the firm Bosher and Lujan CPA. And he's a member of and served as president of numerous businesses and civic associations. Resident of Tampa, native of Vacquerie, Louisiana, which I have been through, by the way. Nice place, great food, and which is a small town outside of New Orleans. And we were giving him a hard time about being a graduate of Louisiana State University and the Go Tigers movement. So we've already addressed that. If anybody has anything else to say, please type it in. Percy, welcome. Thank you for being here.
The way I look at it, LSU beat everybody so bad, everybody's scared to play college football this year. That's my story. I'm sticking to it.
I love everything about that. That's fantastic.
No, thank you. It's a pleasure to be here. I appreciate everything you do. Like you said, I'm from Louisiana. I moved to Tampa back in 1986. I'm the black sheep, got 7 sisters, 1 brother. Got 174 cousins on one side, 74 on one side, 54 on the other. Everybody's in Louisiana. I'm the lone shark out in Tampa. Been very blessed throughout the years and willing to help anyone. In the chat room, I did put my name, phone number, and email in case anything pops up after the conversation. During the conversation, feel free to call me or email me. I'll help you out any way I can.
Thank you very much for that. That's a gift. And if you guys have done any research as of yet on cost for retaining a CPA, monthly, et cetera, you will soon understand is that something that you probably should take a look at as we go. So the first question I have, and I always like to ask this question, is what kind of drew you to being a CPA and be in this accounting and finance world?
I was in 8th grade, going to 9th grade. My dad goes, "What are you gonna do when you grow up?" I go, "What? I'm 14 years old. I don't have a clue." He goes, "Your uncle's a CPA. He seems to be doing pretty good. Why don't you do that?" Okay, fine. And I knew I was going to be a CPA that day. My uncle, who retired, a few years back, I called him up when he retired, and I go, "You dumb blank, blank, blank. Why you couldn't be a professional football player or baseball player?" So that is literally why I became a CPA. And I worked at hardware stores all through my life, even during college, 4 years at one hardware store. And during that time when I was a junior, getting into my junior year, the person who owned the hardware store, the economy was doing bad. We didn't have, things were not doing too good at the hardware store, but he was building some apartment complexes. So one summer, I carried sheetrock up 3 flights of stairs. And boy, did my grades go up the next 2 years.
Nothing motivates a high education like some good old manual labor. That's for sure. Well, and it's interesting because a lot of our guys, and we talked a little bit about this, are doing hands-on blue collar type businesses, woodworking, leather stuff, which has really caught fire throughout the country. And I'm sure you've seen a lot of that, that anything handmade, but especially veteran handmade has been a huge draw for the consumer and the markets. And one of the things that I learned in business school, one of the first things they taught me was you are not an island. You might be the smartest guy in the room. You may have skills in a lot of different areas. You may be technically sound in woodworking or leather making, but do you know a thing about how to manage money and to pay your taxes and to put money in the right place and to charge the right price? And there's so many things to this. And I think it's always fascinating to learn what people know about money and how they manage it. And we talked a little bit about one of the first things we want to talk about is a legal structure. I get that question a lot. And like I said, going through business school, I know a little bit, but what kind of things should we be looking for? I know there's, 4 or 5 different ways to set up your business, but if you wouldn't mind just kind of touching on each of them, pros and cons of each, and what we as business owners can look for.
I'm going to touch on that, but real quickly before that, something that always resonates with me, and people don't understand no matter what profession you're in, and it just kind of happened. I had lunch with someone from a payroll company today, and sits down and goes, this might sound weird, but we're in the business of selling stuff. And I just started laughing. They go, what's so funny? I go, you could be the smartest CPA. You could pass the CPA exam with all hundreds. If you have no personality, you have no clients, you have no business. So no matter what you do, selling is your job, as part of the profession. But you're absolutely correct, Casey. The form of organization is very important. And a lot of it, people start on the bottom and they keep changing as they go along. I'm not an avid fan of that. So the minimum is a sole proprietor. A sole proprietor is where you don't have a separate entity for your business. You operate it under your social security number, or you can do a DBA, doing business as, but it's not a separate entity. A lot of people do that starting off because if you set up a corporation or an LLC, there's some fees involved, some record keeping you need to do, except business licenses. But the big negative about a sole proprietor is if you get sued, you're personally liable. So when you're setting up your entity of what you want to do, you want to look at it from a legal standpoint and a tax standpoint also. Sometimes I tell my client, this is going to hurt you tax-wise a little more than this other one, but this entity gives you better protection. So it's not always the lowest dollar. Sometimes it's what can potentially happen. So a sole proprietor is when you operate on your own, you have no liability protection. We do not recommend it from our standpoint, and I'm assuming very few attorneys would do it also. But a lot of people starting up just do it that way. The next one is an LLC. An LLC is relatively new being 15, 20 years. That's in between the corporation and in between the sole proprietor. So an LLC, you're a limited liability company. So you can be taxed the same. Sorry guys. Thought I turned it off. I'm gonna shut it off.
That's great for all of us. I just had to turn mine off too.
So on the LLC, it's a limited liability company. You can tax it various ways. You have the option to do a different tax return for that type of entity. Most people do it as a single member LLC. I own the business myself, so you can put it on your 1040 tax return, just like a sole proprietor, no separate tax return for the entity. It goes on a Schedule C on your 1040, list your income and all your expenses by category. You can elect to be taxed as an S corporation if you're an LLC. I'm gonna go to the next one, the S corporation. Most of our clients are S corporations. either owned by one individual or a husband and wife or family members. Um, the S corporation for most small businesses is the best way to go. They had some limitations in the olden days where you could have only 25 partners, members, and a bunch of different things. Most of those are gone away. Trust in the states cannot own S corporations. Now they can. So an S corporation is a separate entity. It's got its own federal ID number, files its own tax return. So you'll have an income statement listing your income and all your expenses. You'll have a balance sheet showing your assets, your cash, receivables, fixed assets, accounts payable. And then you summarize that S corporation. You have a K1, which summarizes your income and expenses. That K1 will go on your personal tax return. But now you have limited, you have asset protection. In case someone sues the company, they can't get your personal assets. A C corporation is great for publicly traded companies. A publicly traded company, they don't care how much tax they pay. Their job is to get that stock value to go up. If the stock value goes up, the shareholders are happy, everybody makes money. Trump, whether you like him, hate him, doesn't matter. He cut the tax rates on the corporations big time because the corporation is double taxed. So if you're a small one-person shop and you're a C Corp, you probably don't want to do that because you're double taxed. You're taxed at the corporate level, which used to go as high as 34%, and you got to pay tax at the personal level again. So if you're a small company, you don't want to be a C Corp. Whereas they changed the tax rate to 21%, plus an additional tax if you have a state income tax. Most states do not tax an S corporation, but they do tax a C Corp. And the other form is a partnership when you have two people that form a partnership, and it's a whole separate different rules for them. So most of our clients are small S corporations or LLCs that's taxed as S corporations. The liability is very important and the tax structure. Very good thing to start off with, Casey.
Yeah, so it's, I mean, there's so much there, and one of the things that I was taught was it really depends which way you go. Understanding all of them is important, but which way you decide to go varies widely based on your personal assets, your personal tax return, where you want to go, how you want to grow the business, where it's going to be, and you can always change it, right? I mean, I've seen this happen, and you can always file with a change. Um, One of the things that I was thinking about as you said that is, and I just don't know. Write-offs are a big deal. Most people don't even know what that means. I just think of the Seinfeld episode when Kramer kept saying, you write it off, and Seinfeld's, you don't even know what that means. So talk a little bit about write-offs, and is there a benefit to any one of those articles of incorporation for write-offs one way or the other?
They're all kind of the same as far as the write-offs go, but the main thing that I like to instill on people is if you're starting a company, get a company credit card. Do not commingle your credit card with your personal. Have one for personal, one for business. Open up a separate business account. Even if you're a sole proprietor, open up a separate account with your name and say, hey, this is my business account. Put all your money in there, write all your checks out, all your expenses out of there. And I tell all my clients, if you're in doubt whether it's a deductible expense or not, pay it out of the company. And the reason I tell clients that, at the end of the year, we can look at that and go through it and say, look, from now on, this, and this is personal in nature. And I'm going to use the same, our prime one is buying a suit. A lot of realtors think that my suit's deductible because I need to wear a suit to go. No. The only things that are deductible as far as uniforms is if you're a nurse, you have to wear a certain uniform by the company, then those things are deductible. So, but a lot of people think, hey, I got to go to the dry cleaner, clean my suit because I'm a realtor or a lawyer or this or that. No, that's not deductible. But if you don't, the first year you do it, charge it to the company card, no one ever goes back and says, hey, where's my personal stuff? What did I miss? So I inform all my clients that either you put it in, we'll go through and kick it out, then you not put it in and we miss it, and you go 3 years paying for something personally that could be deductible. Most people use QuickBooks. It used to be 14 column pages in the old days. Then it was Excel. QuickBooks by far is the most popular program for tracking stuff. I'd strongly recommend it from day one, because once you do it, once you get used to it, it doesn't change. Um, with these PPP loans that just came up because of coronavirus, they came out of nowhere, just like coronavirus did. A lot of small companies were not able to get the PPP loan because they didn't have proper records and documentation. Um, Even the ones who got the PPP loan now trying to get it forgiven because they didn't have proper records and general ledgers, bank statements, is causing them some problems. So your best bet is to start off on the right foot from day one. I tell people, go get it set up, do the first 3 months, come see me, we'll go through it, then every month till people get track on it. Um, even the tax deadline date is September 15th for corporations without, extensions. I got a half dozen clients that are going to bring me stuff for a whole year in the next week to get it done by the 15th. You don't want to do that. At one point in time, I think all the CPAs went to some seminar that said how to make more money. And the person teaching that was an attorney. Charge for every phone call, charge for every stamp, charge for every whatever. And I'm like, we started getting phone calls from people. I'm going, what? No. So what happens is a client is like, hey, I'm not going to call my CPA because he's going to charge me $50 for a phone call. Then you get ready to do the tax return going, why you didn't tell me you're going to sell this stock? If you'd have kept it one more day, your tax would be 20% instead of 30. So we encourage our clients, and we don't bill them nickel and dime them. Hey, you got something going on, you tell me, let me know ahead of time. I can help you if I know about it. If you come to me in January after the year end, I can't help you. So don't feel you want to know ahead of time before you do something, not after the fact. It's a lot easier for me to help you before than after the fact. So yeah, you want to keep good books and records. Document, if you look at a Schedule C or an 1120S, it pretty much has all the categories for rent, utilities, telephone, salaries, payroll, contract labor. So it supplies computer equipment. A big thing that's causing people havoc today is in the olden days, when you pull up your chart of accounts, you had meals and entertainment. It was travel and entertainment in the olden days. Travel and entertainment, TNA. Guys, y'all go with it wherever you want. Travel and entertainment. So it was all 100% deductible. So you stuck it in there. Then meals became 50% deductible, but travel was still 100. So now you have to break them into two different categories. So when travel went by itself, then you had meals and entertainment. And you stick it all in there, it was 50% deductible. Now entertainment is not deductible. So we tell all our clients, break out travel, break out meals, break out entertainment, all separately. Now, a good example is talking about golf earlier. There's a lot of charity golf tournaments, this, that, or whatever. If you're going to spend $100 to go golfing, the IRS is going to say, hey, that's entertainment, you're going golfing. But if you buy a pin flag for $100 and you get the golf for free, we're advertising Bezier and Lejeune, Joe Smith on that pin flag. So a lot of times I tell people, hey, even if you pay 20% more net after the tax deduction, you're coming out ahead. So we tell our clients, look at your entertainment stuff and try to get it to the meal section or the advertising section. Right now, a lot of people still try to deduct it, but it's not. Football tickets, baseball tickets. I'm shocked that it got through that was non-deductible with all the unions they have with all the big NFLs and all that. But nowadays, even at LSU it used to be, $500 for a club ticket. Now the club ticket costs $50 like every other ticket, but you got to pay $350 either in a donation or a food or something else. So now you can deduct that meals and entertainment portion and not the entertainment portion. So a lot of things you're going to see that transpiring over the years.
Oh man, that's fast. I remember when that shift took place because my CPA said, hey, you can't, I've had a little small business and said, you can't deduct that anymore. It's only 50% now with the meals or that entertainment. You can't deduct it. You got to come up with a more creative way. And you know, with our nonprofit, people run charity golf tournaments for us, and it's kind of the same thing. It's a foursome, but it's only a percentage of the amount of money that you are donating, because you get a pin flag, you get X, Y, and Z as a part of this donation, and it is a donation, but you're also benefiting playing golf. So there's such a creativity to it. I think that's one of the things that I'm so drawn to this topic is it's not just 1 + 1 is 2. It's how can I make 1 + 1 4 by deducting certain things and getting creative and multiplying and working with the tax structure legally, of course, and finding the quote unquote loopholes with a good CPA like yourself. And I'm really glad that you brought up QuickBooks, because it was actually another piece of advice I got was, even if you don't have a business, just get in the practice of using it. It's really not that, you know, they have levels with QuickBooks, and depending on how complex what you're doing is, if you have credit cards, et cetera. But he said, just start getting in the practice of managing your money through QuickBooks, how much you spend on groceries, et cetera. So I'm glad you brought that up. That was actually a question that I had. And one of the things that you and I talked about yesterday was, there's a lot of CPAs out there. Just Google them in your area and you'll see the pins drop everywhere. Most of them aren't any good. And why that is, I think you made a great point at the beginning. There's no personality. There's no connection. We can't talk about football. Just give me your stuff and get out of my way. I just want to do my numbers. That's part of the reason why a lot of CPAs have that job. So I've been encouraging all of my veterans to interview CPAs, bookkeepers, accountants, financial advisors, et cetera. So before I get into the question about the interview, what I want you to kind of talk about and maybe address in whatever way you feel appropriate is, people use CPA, bookkeeper, accountant, and financial advisor interchangeably sometimes because there's a lack of understanding of what those are. Just briefly kind of chat a little bit about the difference between those 4 titles.
Okay, you said CPA, bookkeeper, accountant, and financial advisor.
Yes, sir.
Or stockbroker. Okay. Yeah. The financial advisor and I'm going to say stockbroker, 2 separate things. Some of them doing it intermingling or not. A financial advisor, they are, you know, when you're a business and you're growing and you're developing, I think your most important people are, you know, your CPA, because I'm unbiased on that, your banker, your insurance person, and a financial planner. A lot of people think CPAs and financial planners like fight, like you're dumber than me. I'm gonna call the architect and the engineer guy. You know, you're an architect, I'm an engineer, and one's better than the other. No, I think they're 2 separate things. You need that, and I am an avid fan. The best time to borrow money or get a line of credit is when you don't need it. Because when you need it, your financial statements are not going to be good enough to get it. So a lot of people are like, I don't need. I tell them, get that security blanket, because you never know what's going to happen. And obviously COVID, none of us expected COVID to happen. So things do happen, even though people say they don't. So I try to position my clients, hey, let's get this line of credit. Don't touch it. Don't go buy a car. Don't go buy a boat. Don't go buy a condo. It's there for business only, and do that. So a financial planner and an accountant, they'll both do the scenarios of where we are, where are we going, what assets do we have, is it taxable, non-taxable, important thing that we may or may not get to based on time-wise, you know, a Roth IRA as opposed to a regular IRA. They both have pros and cons, but each individual person's thing is separate, and you have to look at it as a whole. So a financial planner does projections based on, I'm gonna say, the stock market, or if you have rental income, et cetera, stuff like that. Stockbroker, they're picking stocks. They got good ones, they got bad ones, just like any other profession. Nowadays, a lot of that's becoming more online, et cetera, et cetera. The CPA, and people don't realize, to be a stockbroker, guess what your qualifications have to be? 18 years old and pass the test. You got to pass a Series 6, Series 7, whatever. You don't need any college, no nothing to be a stockbroker. They have some firms that are chop shops, just getting people in and trying to get money from grandma, grandpa, et cetera. But there are some good ones out there that actually, you know, look out for their clients, help them grow. They literally passed a law a year or 2 ago where your stockbroker or financial planner has to have you sign a document that they told you that they're going to do what's in your best interest, not them. And that's ludicrous when you think of that. I mean, that's known already, but no, you have to sign a document with them that they acknowledge that they're going to work in your best interest. And I can tell you what, a lot of them don't. You know, going back to what Casey said, how do you find a good one? A bookkeeper generally just spreads checks. In the olden days, someone would bring you, here's my bank statements, here's all my handwritten checks, and you'd code it to rent, to payroll, to office supplies. And a bookkeeper does that. They reconcile the bank statement. They reconcile the different items. Whereas an accountant can do a tax return, do stuff. There's only two things a CPA can do that no one else can do. People don't realize that. An audit and a review. And when I say audit, a lot of people think, oh, audit with the IRS. Nothing to do with the IRS audit. An audit we're talking about is normally when a company goes out and gets a loan, the bank wants us to certify the financial statements. So we'll go through to make sure the income and expenses and balance sheet is accurate because the bank wants to get repaid on their loan. So we're forming an opinion that those financial statements comply to GAAP. Also, the next level is a review. A reviewed financial statement is lower in level, and it just depends on if the bank requires someone to do it or not. But we look at the financial statements and look at a GAAP. So an accountant can do a compilation, can do a tax return, etc. To be honest with you, anyone in the world can do a tax return. You're not required to have any degree, this or that. When they imposed the tax law, they did not want to impose a fee for someone to have to go get it done. So any individual can do their own tax return. TurboTax does a great job for a lot of people if you have that type of tax return. It really does. And I've seen people do TurboTax that have an S corporation, have rental properties, and kind of just hose it up. So you got to know what you're doing.
Yeah, definitely. That, and that's it was a good lead into the next question, but I got a question from Calvin that I want to read to you real quick. It says, as a sole proprietor, is there a rule of thumb for how much money to set aside from each job for either taxes or business savings?
Very good question. And they got some hiccups and good, bad, ugly. Okay. Generically, on a sole proprietor, it's your income less all your expenses is what you taxed on. Let's say we collected $100,000 in income. We had $75,000 expenses. We made $25,000. So income 100, expenses 75, $25,000. Which catches a sole proprietor off guard is right away you got to pay 15.3% to Social Security. So before you start on any federal income tax, you have to pay Social Security. Most people who are employed by someone, half of it comes out of your paycheck and the employer pays the other half. So it's 7.65 comes out of your paycheck, 7.65 comes out of the employer pays the matching. So a lot of people aren't ready for that whack the first year you do it and go, oh, wait. So you need 15%. Then you need another 15 to 20 to 25%, depending on what your income level is for federal income tax. So on a sole proprietor, it could come out to be 30 to 40% of your net income that goes to tax. And people they get all flustered, and it's a big hit if you're not waiting for it. There's got something called estimated tax payments where you pay quarterly of what you owe. Between me and you, if it comes out of my paycheck every week or every 2 weeks, it's a lot easier not to see it than have to come up with a check every quarter even, much less once a year. As far as savings, the rule of thumb, and I'm going to get off the sole proprietor for a little while and come back to it. I got kids that are 26, 27-year-olds and got all their friends, and I tell them, look, guys, if you're working for someone who has a 401k, maximize what you can, at least where they meet. If you put in 3% of your salary, they'll match 3%. That's free money. Get a Roth IRA if you're younger. And realistically, if you can get to where once you're up and running to 10% of your salary each year going into that IRA 401k, you'll have $1 million by the time you're 65 years old. Now, what does $1 million buy? I don't know. But most people's wealth, other than if you own your own business, people who own their own business usually do better off than if you're working for someone. It kind of just depends. Is that retirement account. And it just kind of grows over time. The stock market right now is going nuts. Don't know how, but it is. And if you save a little bit, that's how you get rich quick. Save a little bit. You want to invest it in the stocks. What's going to do good or bad? I don't have a clue. But if you look at history, the stock market has done very well. I think we're probably going to see a hiccup coming up soon with the unemployment, etc. On a sole proprietor side, there's a lot of options where you could put a lot of money away for retirement. We have some consulting guys making $200,000 or $300,000 a year, and under certain plans, they can put like 80% of that into a retirement account. And it works very good, but it's got a lot of detailed with the IRS. You have to do this, this, and this. It's part of the old defined benefit plans, which you don't see anymore. They kind of came back. Companies, been a long time, been around forever, used to have the profit pension sharing and profits. Now they're doing the 401k. So you see very profit sharing ones, but so people who do very well can put a lot away. Hopefully I answered that question. Yeah.
Great. Yeah, no, great question. Actually, that skipped ahead a topic, and I'm glad that you brought that up because I get that question a lot. How much either they aren't thinking about savings for taxes or for a rainy day fund or for a virus, and now everybody will be because that's the way it is. So maybe prices go up in the market, et cetera, so that you can compensate for a 6-month downturn in the economy. And we should always be saving. I mean, that's just a general financial principle is put, if you're a Dave Ramsey guy, you got to put 3 to 6 months of savings away and then take whatever, get rid of your debt, et cetera. And that's a different topic. But I actually got another question from a gentleman and his wife who run a CrossFit gym. And he's got his little baby boy who's beautiful right up there in the screen. Festino says, this year is our first year in business. We have been doing a good job at keeping records of expenses and gains. I feel like our business is fairly small, which I would agree with you, it is. Do we need a CPA?
I'm not going to say yes, you definitely need a CPA, but by the time you get to the tax preparation stage, and I'm going to talk a little bit off target, then I'll get back to that question, okay? I'm going to call it the evolution of a CPA firm. Someone starts a CPA firm just themselves. They're going to do payroll tax returns. They're going to do write-up. They're going to do anything and everything they can get in the door because they're up and running new. You do what you got to do to make it work. As your business expands, you'll get into more profitable segments. And you'll get rid of some of the stuff that it's time-consuming, burdensome, and doesn't make you money. And as you get more people working for you, it kind of flows that way. So it's kind of like the evolution. You might not need a CPA, but a lot of my success that I do is people call me, hey, Percy, I'm a brand new business, can you help me? Some CPA firms will say, no, you're too small for me. I do a lot of work for clients that I don't charge them anything, okay? Because my biggest client, who pays me a bunch of money today, paid me nothing 30 years ago. He's our biggest client today. I came from nothing. Small town, Louisiana, my dad worked 3 jobs, so I can go to school. I paid for my own college. So people have helped me along the way, and I, if I can help someone out, and I do have clients now that have a lot of money, pay me a decent salary, a decent fee for what I do, but they have a good year, they go buy a Mercedes, go buy a condo, and go to 20 trips, I will get rid of that client. Because what happens is they're on the road to bankruptcy. Even though they got all the toys in the world, they're into bankruptcy. Oh, it's Percy's fault I'm bankrupt. So if I got a client who's struggling, trying to do good, busting their butt to get it done, I will work with them. I can have a client that got money that just, you know, you can see them going down a bad path, I get rid of them. So even if you go find that CPA that says, hey, I will work with you, we're all in it together. We're all human beings. You got to, you know. So I would tell you, consult with your friends, see who they use, et cetera, et cetera. Granted, somebody kick you out the door. Hey, you're too small. You'll find the one that says, hey, I will work with you. So a lot of our business today is from helping out somebody else. Hey, dude, I had nothing. The guy took care of me. And now I'm paying him back for it. You know what I mean?
Yeah, no, Faustino, great question. And if you have a follow up, you can definitely unmute and talk it. But one of the questions that I had, because I always encourage go get a CPA because I can't answer your question for you, and this is why this is such a valuable Zoom. But in going to look for a CPA, let's say we're ready, we know we need one, we're a little over our head. What kind of things should we be asking? Is it, first of all, is it okay to say, hey, Percy, you know, I call your company and say, hey, I'm in the market for a CPA firm. Can I come and interview you? Is that completely acceptable in your industry?
To me, it is. I mean, yeah, that first of all, it shows that someone who cares about their business and wants to make sure it's the right fit. Lots of times people come in and it's you know, you got to know what you're doing, but you also got to fit the personalities together sometimes. Like, hey, who's gonna get along with who? But no, I mean, due diligence. They got something called peer review. If you do audits and reviews, like I was talking about earlier, you have to do a peer review where other CPA firms come in and review your records to make sure you're doing your job. Nowadays, you hear all the CPA in Florida was one of the last states to adopt this. It's a CPA license is by state. It's crazy. We all take the same national test, but you're licensed by state. So it's almost like they're kind of holding people hostage. But in Florida, peer review became mandatory in 2015. So if you pull up someone's website and the first thing it says, we're peer reviewed, you probably don't want to use them because they're peer reviewed because in 2015 they had to. I've been doing peer review since 1992 voluntary. So I don't have to advertise that I'm peer reviewed. So all these people start advertising, we do peer review because you have to. Why were you 20 years ago when it was voluntary? So you got to see how long, and I used to call it when things go bad, people always try to grow things. In the olden days, it used to be ask them if they're members of the AICPA, ask them if they're a member of their state society, ask them if they're a member of this organization. That's not a valid question anymore. It's how long have you been a member of this? How long have you been a member of that? Because once it's mandatory, you got to join it. Oh, yeah, we're a member. So you want to ask somebody how long they've been a member, how long they've been in business, getting sued. If you look at the size of our firm and the volume our firm does, the statistics say we should have been sued 20 to 25 times, which to me is like ludicrous, ridiculous. I know it's coming one day, but in my 35 years, never, not once. A lot of it is because know your client, know who you're going to bed with. Because if you're leery about that client, stay away from them. I tell people, you don't get sued by a client you don't have. If you get rid of them, know your client is very important. A lot of times people come to me and I go, no, I can't help you. I don't do that type of work. I don't have the expertise. But it's easier to get off on a good page with a CPA. At least go talk, interview them. At least you can see what it is they're going to charge you and what they're going to do.
Yeah, it's a fundamental pillar of your business is managing the money to make sure you don't get sued or get audited by the IRS. So you got to have somebody you trust.
And the other thing is a tax return done by a CPA or a Schedule C as opposed to being done by an individual or someone else, you know, it kind of makes a difference. We are required to have continuing education. The tax laws I'm not going to say change every day. Right now, they change every hour. And between now and the election, whether you like Trump, like Biden, hate Biden, they're going to have crazy stuff going all along to get reelected or get elected the first time. So they're going to promise this, that, whatever. So, even recently, Trump made a executive decision himself that you can defer the payroll taxes of an employee. We're not even sure if it's legal or not, because Congress got to pass tax laws. He can't do it. We're recommending to our clients not to follow that, keep doing like it is. And it's a deferral. You got to pay it back. So I'm going to give you $200 or more in each paycheck, but I'm going to take $400 come January of your paycheck. So I think we're going to see a lot of stuff with the politics going on. So you need someone that keeps up on it, whereas a normal bookkeeper or accountant might not be up to date. I spend a lot of money on computer software programming and textbooks and stuff like that we need to do our job properly to advise our clients. And the main thing is you want to do tax planning. Our clients know what they owe in October for the May coming up, for April coming up. We don't wait till March to say, let me do your tax return. September 30th, we update all of our clients through September. We estimate the next 3 months. Hey, here's where you are tax-wise. Here's where you're going to be. And I always do one thing, whether it's a cash or accrual basis taxpayer, here's your beginning cash. Here's your net income. So you start off with $50,000. Your income was $50,000. You should have $100,000 in the bank. Oh, but you bought a new boat for $80,000. I don't want to hear you don't have money to pay your taxes.
Yeah, I love the fieriness. I love it. This is why I like this topic, because there's so much to it. Again, more than 1 + 1 is 2. There's a lot to this. It's important, and it's important to have good people around you. I had mentioned that was a great business lesson. No man's an island, and having the right people around you that can think that way, that have the experience, that are, you brought up politics, and the only thing I'll say about it is this: it's important to be informed, but not inundated. We have to know what's going on, understand the implication, filter it through our experts like you, and go, what should we do? What's our plan? Let's commit to it and let's go. Because I'm running a CrossFit gym or I'm building wood products. I want to do that technically every day. I don't want to be thinking, do I owe that $400 per employee every month? And what am I supposed to? I want to call Percy and I'd be happy to pay him to do that job for me so that I can manage my business. It's a good balance.
And going back to, you want to talk, Mike, or not? And going back to your thing about how did I get in this profession, and going back to your 1 + 1, is 2 or whatever. My first job interview, the guy before me comes in and they ask him, what's 1 + 1? The guy goes 2. He goes, okay, thank you. Next guy comes in, the guy goes, what's 1 + 1? The guy goes, 2 or it's 11. The guy goes, good. I go in there and the guy goes, sir, what's 1 + 1? I close the blinds. I go, what do you want it to be? Got the job.
That's good. You're also a salesman, which is an important thing to have. You said it at the beginning. We're all selling something. Yeah, no, I think the next thing that I kind of wanted to talk about, we've talked about briefly, but I kind of want to step away from the specifics of, is it a sole proprietorship? Is it an LLC? Whatever. Coming into a business, a new business owner, never owned one before, just have a skill and you're making something, selling it, and there's a bit of a profit there. Generally speaking, when you look at a budget, what percentage, I haven't set up my legal structure, what advice would you give to somebody about how to budget in terms of how much money should I be putting away for savings, just generally?
Okay. I really can't answer that individually, but I'm going to just talk in general.
Perfect.
I can honestly tell each and every one of you, I cannot make a client do nothing. I can't make them do something. My firm, I don't mind pushing the envelope on tax deductions. If it's the gray area, I don't mind pushing it, provided the client knows it and we have documentation why we're doing it. If someone wants to go over the envelope, I'm not their CPA, go somewhere else. If I have a client that's conservative in nature, I'll say, hey, based on my relationship and knowing you, we can or cannot. And like I said, if I have documentation, I will. Whether I have a small client or whether I have a big client, the ones who do a budget come out way ahead than the ones who don't. And I'm going to tell you why people don't do a budget. I don't care who you are. You leave your house with $1, you come back with zero. You leave your house with $10, you come back with zero. You leave your house with $50, you're going to go get a steak dinner for lunch instead of McDonald's. It's human nature. I've seen it numerous times. But if you get QuickBooks, even for your personal finances, you'll sit down and go, oh, I do eat out a lot. Oh, yeah, I do go to the movies more than I think I should. And when you do that income statement, whether it be business-wise or personal-wise, you will sit there and go, okay, now I know why I don't do it. I'm going to quit doing it. That's why I call it forced savings. The worst thing you can do, real life, when you do a tax return, the answer you're supposed to get when you come see me is, hey, here's your tax return. You owe $10,000, and you should thank me because this is the most you can pay to the IRS without incurring a penalty. So you had this $10,000 that you could have invested, and now we're giving the IRS their portion. That's the right answer. The worst answer is you come see me and I go, hey, you're getting a refund of $10,000. You're supposed to hate me because now the IRS used your money for $10,000. I have my clients do forced savings because I know human nature is you're going to spend that 10 grand and you won't have it to give to the IRS. So I have no problem going against what the true way you're supposed to do it. Even myself, when I bought my first house, I made sure that I got a refund of $6,000 every year. And I got a refund and paid my house off. $6,000. Boom, 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 boom. Otherwise, that $6,000 is getting paid on something else. So most people are not disciplined enough to save. But if you get that budget, it forces you to save if you're true and honest and look at it. That's why I refer anybody who's working, not for themselves, but a company, get on the 401k. Put 10%. And cross your fingers. You're going to be better than 80% of the people in this world. So it's human nature to spend what you have. It's in your pocket, in your bank account. So I'm an avid fan of pushing it away. So you need to look at what industry you're in. Some industries, 30% of the bottom line is a good number. Some of it's 10% of the bottom line. So you got to look at what industry you're in, see what the guidelines are, and say, hey, this is what I want to do. And monitor it and look at what you see. Most industries have your cost of your goods for your food for a restaurant should be X. Your wait staff should be X. The number of laborers you have. If you're your own person, it's your productivity, what you can do. I can only do so many tax returns. So I'll make X number of dollars when I hit my maximum. Then when I hire someone, I'm going to take a dip because I'm paying salary now. But that person allows me to go higher. So you do make money off of other people as you grow. So you got to kind of look at your own self, look at your industry, get a baseline, and then just monitor that throughout. The olden days was do the budget and whatever's left, put the savings. They're teaching the young kids nowadays, I don't know if it's good or bad, pay yourself first. Take 10%, stick it in the savings account, don't touch it. Now, if you obligated yourself with a bunch of other loans, I can't see how that's a good scenario, but that's the mentality they're teaching the kids nowadays. A lot of younger people don't know the power of compounding. But just saving $2,000, $3,000, even if you start with X number of dollars, that interest rate, if it's in the stock market, it adds up. And a lot of places, Fidelity, Schwab, have very low minimums to get into it nowadays. Not to say it's not a risk, because right now it's stock market's crazy.
The eighth wonder of the world is compound interest.
Yep.
And it works both ways. I save, it compounds. If I have debt and I don't pay it off quick enough, it compounds. There's some people on this call that we had a discussion about that, and I'm so damn proud of them because they paid down all their debt and they worked hard and made sacrifices. And I always like to say a budget is just it's an outward expression of the inward discipline that you have. And if you have that discipline, you can budget and manage money and know where it's at, and it's no problem. There's nothing wrong with not having it, but to not pursue it, I think, is the problem. So I actually have another question. You touched on it just briefly. It's talking about paying yourself. So when would be a good time that you can look at paying yourself, whether you need it or not? I mean, generally speaking, in a business, when should an owner do that?
Okay, those are that's one of the good, bad, and uglies. If you're a sole proprietor, you don't take a paycheck. You just take, income comes in, expenses go out, whatever's left is yours. If you're an LLC, you could do it that way, or you could be elected to be taxed as an S corporate. When you have a corporation, you have to take a salary out of it. I tell my clients, don't start taking a salary till you know that you have enough business to have that salary every week, every 2 weeks, whatever it is. You got a lot more paperwork when you start doing a salary. And even if you're saying it's the same salary every 2 weeks or 15th and 30th, if you got to miss one of those, the states are worse than the federal government. You don't file a tax return with the state, even though the numbers are zero, like sales tax, they'll charge you $50. They'll charge you $300. They'll nickel and dime you all over the place. You will get more junk mail than you ever imagined. So I tell all my clients, till you build up enough to know you can sustain a certain salary each time, hold off on that. It's very important that an S corporation, you do take a salary out. One of the good things of an S corporation is the earnings after you take your salary are not subject to Social Security tax. That's good and bad. A sole proprietor, if you make 100 grand, you're paying 15,000 in Social Security tax. If you're an S corp and you take 50,000 out in salary and 50,000 has income from the company, you're only paying 15% of the 50,000. Catch 22 is though when you do retire, you're going to have less Social Security paid in. And I get the question all the time. I am a genius. I get this answer correct every time. When should I start taking Social Security? Should I take it at 62? Should I take it at 60? I go, I got the exact answer. You tell me what day you're going to die, and I will calculate and give you that answer. So that's really what it is. Do I have enough money to live off of? Depends. Tell me when you're going to die. Being facetious and all that, but, I think more, and sometimes you look at your weight and you go, hey, instead of getting $100 a month, I'm getting $150 if I wait. Well, how many months of $100 you didn't get? That you didn't get the $100. So you got to actually weigh it on and do the calculation to see. A lot depends if you're married, if someone dies, it's a goofy calculation. Yeah.
No, that's great. That's great. And it is. It's interesting. And I've always been told that Social Security should not be something you fully rely on. Yeah, it'd be nice to have and think of it as icing on the cake, but who knows what it's going to be like in 30 years, 20 years. We have no idea. So another question we have, you brought up the industry guidelines for CPAs, et cetera, and taxes and that. Where is there a place we can find that stuff?
It's through subscription only, and they're pretty expensive. I'd have to go look at them and say, a lot of it nowadays, if you just Google, you can get some good guidelines. A lot of people ask, how much is my business worth? I said, first of all, are we buying it? Are we selling a business? You know what I mean? What are we doing? Which side am I on first? Who am I fighting for?
That's right.
But, and it used to be called, not Robert Half, but Robert Morris, I think is what it's called. That does a real good job. The bankers use it all the time. So when you're getting a loan, they'll look at your industry. They'll chop it down between size and people and all that to see where you fit in. The guideline, like for a CPA firm is, because some of the guidelines are horrible. A guideline for a CPA firm is you sell it for 1 times revenue. So let's say we got 2 CPA firms. One's making $1 million on top. He brings $500,000 to the bottom line. Let's make the other guy got $1 million on top, and he's bringing $100,000 to the bottom line. Which one am I going to pay $1 million for? So all my clients try to look at that revenue number. Oh, an insurance broker goes from 1.5 times and this, that, or whatever. Yes, if you meet the CPA guideline of 30% of your money is going to the bottom line, yes, it's going to be worth one time. If you're an insurance guy and 50% is going to the bottom line, yes, it's going to be worth 1.5. The thing nowadays people are looking at is EBITDA, earnings before interest, depreciation, taxes. That number times a facet of 6 to 8, even 12. Businesses are going for big, even in COVID, a lot of things are getting shut down. No one's buying them. We've had 3 deals closed within the last 2 months at money that I'm sitting there going, they're never gonna be able to pay that back. So I look at it as cash flow, as a facet of cash flow times 4, 6, 8, is what you're doing. So in industry guidelines, I would say you could probably Google it to try to see, because everything else is prescription based and it's very, very expensive.
Yeah, and a lot of it depends on the market and the timing, and a company that maybe 3 months ago that wanted to sell and had a ton of inventory and PPE that you couldn't find anywhere is probably going to be worth a lot more than it is now, because PPE is everywhere. But
Yeah.
so there's so many factors. That's an interesting. I actually took a class through the SBA, a free class. I think it was like $30. The how to value a business and how to look at just the numbers and that EBITDA, which is when I first got introduced to that, my head was spinning. Like, how am I supposed to understand what that even means? But it's really not that complicated. I mean, it is, but just sitting down and reading it. So we can all make that happen. We can all learn, and as much as small as your business may be, or as big as it could potentially be, or is, there's still something to learn and grow from with all of this stuff. And there's always opportunity. So I'm going to close with one question, but I won't ask it yet because we just got another one. So I think it got addressed, Johnny, about what's a great software to manage your business finances. So QuickBooks. Is there any other options out there that are close to QuickBooks, or any other options we can look at?
I would tell you, for the price, they have money. They have 3 or 4 or 5 different competitors, but I'm gonna tell you, upward over 90+% people use QuickBooks, and I tell them just stay with the norm because everybody knows it. Another thing you might want to take note of is called a Z-score. If you got a chance, Google Z-score. Z-score is this crazy calculation bankers do, but it tells you the probability of you going bankrupt, and it's really, really accurate. Going back to EBITDA, literally, it's EBITDA with a C now, and that C is for coronavirus. They've added to the calculation the effects of coronavirus just within the last month or two.
Wow.
I don't even know what it means. I like, what?
Wow, that's interesting. And that just isn't a great example of how we have to be aware of what's going on and be prepared and have a team. Again, let's find good teammates, that people we can partner with, that we can either trade value for value or pay them, or trade outs, whatever it works, but somebody you can trust. And sometimes that means you got to date a few dogs to find the right one. And that's okay. That's okay.
In a quick story, we do a lot of HOA condominiums, and they have to save for the roof. So they get this person that comes do the study saying the roof's gonna be $300,000, and they collect their money so they have the money to do the roof. Back in 1990, client did the study. The roof's gonna be $300,000. They collected the money from the unit owners. In 1992, they got ready to do the roof. Who wants to guess what the cost was? $600,000. What happened was Hurricane Andrew hit Miami. Miami was off the map. The hurricane did not hit Tampa at all. But to do that roof, which would cost $300,000 in 1990, cost $600,000 in 1992, because all the roofers were in South Florida. The materials doubled all over the state of Florida. The labor doubled. You couldn't find a labor. So even though people's inflation is 3%, 4%, you have to look at what industry you're in and what you're doing. So it was really $600,000 because of the hurricane that didn't hit us.
Wow. We had a similar problem with hail here in Colorado, that almost every roof in the metro area needed to be replaced. And there was no labor. The companies couldn't get the equipment. And so if they were going to take the job, even if it was 3 months out, it was still $5,000 to $10,000 more than what it normally would have been. The market is a weird place.
when you see that Gulf Eagle truck driving around in Colorado and probably in most of y'all states, that's that client back in 1974 that didn't have a dime. And now he has 76 locations in 35 states.
Wow.
Does a budget every year.
Wow. What a discipline. That's, this has been great for me. I mean, this allows me the opportunity to talk a little bit more intelligently about some things to the apprentices I work with. And for you that joined, I hope that you got out of it something you didn't expect, but also what you expected. Percy, this is great. One of the things I like to ask at the end of these kind of interviews is, how can we get better? So normally I would say, what kind of books can we read to become more educated on what's going on? I don't know if they're out there, but I did find the other day, and I'll get to the question in just a second, but I did find a gentleman the other day that was talking about CPA, tax structure, what to do as a business owner. Like, here's a move that you can do. You can buy a business and put it in the Roth IRA. And it was highly technical and there was qualifications and et cetera. But I found myself like really inundated, like just loving this podcast I was watching because I was just learning. Is there something like that out there for our business owners that they can look at, a podcast, a website they can go to just get some more education, general education on stuff like this?
I'm not going to guide you anywhere specifically, but I can tell you in my experience, when I get stuck with something, I go look for one of them dummies books, those yellow dummies books. They are the best, in my opinion, on everything I've ever used them for. I don't know if they have a dummies for accounting or a dummies for bookkeeper, but if they did, that's what I would recommend. Like the old Cliff Notes when you're in college. Read the book. Okay, let me go find Cliff.
Cliff made a lot of money. Yeah, Cliff Clavin. Yeah, no, that's good. That's good. Well, Percy, thank you again. We really value your time. Appreciate you very much. You went above and beyond for us, and I'll speak for everybody in just saying thank you again. And I'm gonna copy. If anybody needs Mr. Percy's contact information, let me or your advisor know. I'll have it in my inbox, and we'll make sure y'all get connected. Just be sure to copy your advisor when you reach out to him, so we know what's going on.
And if you send me an email or give me a call, just tell me Casey sent you. Don't tell me Mike sent you because I won't even answer it.
It tells you their relationship. What a beautiful thing. Everybody have a great day. Stay safe. Thank you again, sir. And we will talk to y'all soon.
Thank you, guys.